Good morning, everyone, and thank you so much for joining us today. My name is Frances Taylor. I'm Head of National Accounts here at Kensington, and I'll be your host for today's webinar. So this is our morning session, and it's the changing landscape for the self-employed. Thank you so much. We're quite overwhelmed, actually. I'm just checking the numbers of how many of you have logged in and registered for today's session, and for this particular two webinars that we're doing today, we've had over 2,500 of you register, which is absolutely amazing. It's the 7th in our series, so you can see some of the webinars that we've done previously here. The reason we're doing self-employed today is actually because it's what you've requested. So at the end of each of these webinars, we ask for feedback and what you want us to talk about, to research, etc. And self-employed came up many times, hence our webinar today. So again, we'll ask you for feedback at the end of today's webinar. So anything that you want us to talk about, then you just let us know, within reason, of course. So I'll do a little bit of housekeeping before I talk about the agenda. Throughout the session today, you have the option to submit questions. So if you've used this system GoTo before, you'll see on the right hand side of your screen a control panel. So there's a chat function in there, and you can ask Eloise, who's on hand throughout the session today, any questions you have. If it's for myself or any of our guest speakers, feel free to do so. The slides are also available to download. So in the handout session on the control panel, there's handouts, some of the data and stuff that we'll be going through today, but we will also send you a copy of the recording at the end of the webinar. I think that goes out this afternoon about 3 o'clock. So we'll be around 45 minutes today, so I'll try and keep my chat to a minimum to make sure you get off in time. We'll send you a CPD certificate later today, so don't worry about requesting those, we'll send them straight to you. And also, if you have any technical issues, I know sometimes people have issues with the sound for some of the videos we play, etc. So in true technical form, just turn it up or turn it down, or log on and log back off again. But if you're having any real issues, just message Eloise in the chat function and she will be able to help you. So I'll just go through the agenda for today. So I'm actually going to do some market insights. I've got a few slides to share with you just around the self-employed market and customer demographics specifically. We then have one of our panel sessions. So our very own Craig McKinley, our new business director. We have Nicola Firth, who's the CEO and founder at Knowledge Bank, and also Danny Belton, who's head of lender relationships at Legal & General, who will be joining us. We will then be doing a criteria update, and that's being done by our own Eloise Hall. The reason we put this in there, and we haven't done this before, is when we've asked for feedback from each of these sessions, is that you really want to hear what our criteria is. So we've put that in there, so hopefully that will fill the gap for you there. Craig will then have a look back over 2020 and what we've been up to, and a little bit of a glimpse into the plans that we've got for 2021. So market insights. So I'm going to go through a few statistics with you. I think you'll find them quite interesting and somewhat surprising, actually. And what this session will really do is set the scene for the panel discussion that we're going to have afterwards, because a lot of these things come up in the panel session. It's definitely something that we're thinking about as a lender here at Kensington. So first up, I'm going to do a bit of comparison of the market. So what's changed? So let's look at 2001 compared to 2020. So in 2001, there was approximately 3.3 million people of the UK labour force that were self-employed. So that equates to around 12%. If you look at what requirements lenders had for applications, we had kind of a minimum of 3 years self-employed history was required. It's been quite general, but from the majority of lenders. If you then fast forward to 2020, that increases to 5 million of the UK labour force being self-employed. So that equates to around 16%. Lenders have relaxed a little bit, so the majority of lenders will ask for 2 years self-employed history, but the specialist lenders we really do see leading the way, with some of them only requiring 1 year's trading history. Now that's something that we do here at Kensington, depending on your loan to value, and Eloise will go through that later on in the criteria session. But even though we're seeing the number of self-employed people rising. We're seeing lenders understanding more what they need. We do know that those customers still do struggle. And some statistics here for you, actually, from a recent survey, 36% of self-employed individuals did not submit a mortgage or a remortgage application because they expected it to be rejected. So that's not a great customer sentiment at all, and that's quite a high number. 21% of people that actually made an application, so a self-employed person that made an application, were actually rejected, with a fifth of those being turned down 4 times or more, which is huge, and again, not a great customer journey at all. 65% of self-employed workers have actually considered switching from being self-employed to working for an employer just to improve their chances of getting a mortgage application through. Now, we know that that's not necessarily true, but it definitely shows us customer sentiment and how they're kind of feeling within the market. So something that needs to be addressed, absolutely. So I'll move on to the next slide. So looking at a self-employed person in 2021. So first up, I wanted to call out kind of the types of jobs and the professions that are changing in the industry. I mean, they're evolving at very high speed. Some of the top applications we actually have at Kensington for self-employed include athletes and dog walkers, which is quite surprising or unexpected. And who knew you could kind of create an income from YouTubing, blogging, influencing, TikToking, not quite sure what that actually means, but so many more professions that we'd never even heard of before. In terms of the customer demographic, so if we're looking at the age of these people and the gender, we're seeing more and more 16 to 24-year-olds than ever before becoming self-employed. Now, they're not necessarily making a mortgage application right now, but definitely that could see what your business may look like in the future. The majority of people are still 45 to 54 years old. If you then look at the divide between men and women, 64% of men and 36% of women are self-employed in the UK. And that equates to, if you look at the overall, 19% of men in the UK are self-employed and 11% of women are self-employed. What we did is we wanted to know why these people were self-employed and what the reason for that was. We were told that 63% of the self-employed people have a greater control in their hours, which is beneficial to them. 56% of them have a choice of where to work, and 55% enjoy a better work-life balance. Now, I'd probably caveat there that this was pre-lockdown, and you're probably listening today, you may be in a spare room, in a whatever room I'm in, a want-to-be nursery, or you've got pets, husbands, spouses, whoever it is kind of involved in you. And those statistics might not quite hold up right now, but they were done pre-lockdown. So just the last slide I wanted to share with you was the impact that COVID has had on the self-employed, and actually looking from very much from a lender's perspective in terms of risk, comparing an employed to a self-employed person. So if you look at an employed person and the financial reserves that they hold, typically a self-employed person who has employed person, sorry, will have 31 days of financial reserves versus a self-employed person that will have 6 months. So very favourable there to a self-employed person. If you look at small businesses, which are generally 10 people or less, they could actually sustain themselves for 9 months or more. So very, from a risk perspective for a lender, self-employed are very favourable. We then wanted to pull out 3 people who may have been affected or not affected during the pandemic. So you've got a example here of Steve, who owns a local bar, who may have seen a drastic reduction in their earnings. However, I think some of the key buzzwords in the mortgage industry right now are diversity and adaptability. So many people have adapted their business kind of to go online, providing takeaway services, online cocktail tasting, whatever you've done at home to kind of keep yourself entertained during lockdown. People have actually turned that around for themselves, but not everyone, granted. We then got a second person here, Jan, who's a painter and decorator, haven't seen any drastic impact. The lockdown might not have affected them in a certain industry, etc. And then we really wanted to point out this third person, And that's Amir, who runs a PP import business or something related to that, and has actually seen a drastic increase in their earnings. And that's probably the one sector that we don't pull out as much, the people that have really benefited from the pandemic, either changed their business, etc. I promise that person doesn't live or have a contract with any sort of politician. But I just wanted to pull that out because it really sets the scene quite well for our panel debate coming up. So if you have any questions, make sure you submit them on the chat function, but that's all of my slides for now. And what we're going to do is hand over to our panel debate. So I mentioned we have Craig McKinley, who's our new business director. We also have Nicola Firth, who's the CEO and founder of Knowledge Bank, and Danny Belton, head of lender relationships at Legal & General. Now, this is really great to have Knowledge Bank and Legal & General on, because they hold, as you may or may not know, lots and lots of data. So we'll be sharing some of that with you next. So let's head over there straight now. Thank you. Hello and welcome. Thank you, Danny. Thank you, Nicola, for joining us on the panel debate today. How are you?
Very good, thank you.
Good. Loving the festive Santa's lair that you seem to have, Danny. Very good. Thank you very much for taking some time out today to join us. I know how busy everyone is. To talk about what we feel is a really relevant subject in the market at the moment, being self-employed. It's going to be really good for the brokers to kind of hear from L&G and from Knowledge Bank and have a look and some insight into some of the data that you have, which we will be bringing up later in the session. Of course, Craig, welcome to you as well. Thank you. I always leave you till last, but always really good to have a lender's perspective as well. So I'm going to direct the next few questions. So we've got around 20 minutes. I've got 5 questions, areas to cover. So I'll direct the questions at you, but feel free to interject if you want to add something to a specific part of the subject. Okay, so we're going to start at looking back. So the self-employed market has gone through a number of changes recently. We've seen lenders leave the market, some criteria changing, introducing tougher criteria. So in your opinion, what did the self-employed market look like pre-COVID, and what changes have come as an impact of the pandemic? I'm actually going to start with you, Craig, from a lender's perspective, please.
I think, well, pre-COVID, it was a really buoyant market. I think lenders, there was lots of different choices for brokers and customers, and lots of kind of appetite for self-employed. Sadly, I think that's got a lot worse over the last year. I think it's now much harder if you're self-employed. Self-employed is undoubtedly more complex than it was a year ago. And I think that means underwriters would normally need to see a self-employed case. I think that's probably harder for the high street lenders who naturally have got less underwriters. So I think that's led to some backlogs. I think we have seen quite a contraction with some lenders as well in terms of criteria. I think generally there's a misunderstanding from lenders that self-employed are higher risk and self-employed will be more affected than employed people during this crisis, which I just think is incorrect. You know, we all know people who have done well during the crisis. We know some people have sadly done badly, but actually most people haven't been that affected, and that's the same for self-employed. And we've certainly at Kensington always taken the view that self-employed are lower risk than employed. We know people have got better reserves. They can last longer than employed people because employed people get into the habit of thinking they're always going to get paid. So we're very favourable towards self-employed people. We haven't changed any policies. We'll still do 1 year's accounts. We're still very flexible on income. We'll take 100% of multiple incomes, and we'll still actually, for high earners, lend up to 6 times loan to income. So I think things sadly have got harder. I think it's more of a specialist market, but I think the main point is I don't think it's necessarily fair, because actually I think the self-employed are still a really good risk, and when you dig beneath the surface, a lot of them just haven't been that affected at all.
Yeah, absolutely. Nicola, and Knowledge Bank, what about your perspective?
I would agree with that, Craig, what Craig just said there. Absolutely. I mean, if you look over the last 10 years, things were really going in the right direction for self-employed people, and underwriting had come on in leaps and bounds, the propositions that lenders had. Obviously, the impact of the pandemic, it's had to have an impact, and it has. And as well as underwriting criteria, we've also seen the impact on processing times, on document checks, and all of that. So again, timescales sort of impacting there. But yeah, things do seem to have sort of rolled backwards, and it just seems to be one of those things that it's the self-employed market that gets hit first, and we see that. We do see that, and it tends to be, as it is definitely now the domain of the specialist lender again. But the good thing is that there are lenders out there, as we've seen from the criteria that's available, lenders like Kensington that are looking at it differently. But things have changed, and things have sort of rolled back ever so slightly, I think.
Yeah, absolutely. And Danny, have anything to add from an L&G perspective?
Well, I'd certainly concur with both Nicola and Craig there. It's gone from being very positive to being not very well supported at all, I think. But also got to reflect that whilst I think we are focusing on self-employed, the whole market was affected by COVID, and certainly a number of applicants across the piece would have struggled to get funding, and we know it sort of shut down. But I also think that this is a market that is generally favoured by the specialist lenders because they're very much more manual approach and taking time to understand. And a number of those had to pull out the market as well for potential funding issues and things. So the choice was limited in a very unfortunate way. But thankfully, we've now seen those lenders come back to market. And I think it's now about taking stock of what has happened, actually understanding, taking the time to maybe review what we currently do, and is there a way to get the self-employed back on more of an even keel to the employed market, and actually just maybe adapt the way that we do things. And I think it's just a great opportunity to think differently, think positively still, because they are a great opportunity for some great customers, and I do see this market actually growing.
Yeah. Absolutely, there's some key points there, and I'll come back to some of them nearer the end of the debate, actually. So talking about change and adaptation in 2020, there's been lots of it. So far, it looks like this will continue into 2021 and beyond at some degree. Data for L&G and for Knowledge Bank is a huge part of what you do. What trends and changes have you seen within your business regarding self-employed inquiries? And Danny, I'll come straight back to you because I know we've got some graphs to share as well.
Yeah, no, thank you. And I think data has been very obvious. Both Nicola and I work very hard at this sort of stuff to try and use our systems and things that the technology developed to help the broker community. And the insights are fascinating. I've just got a couple of slides. So this one here, it shows that the query levels. We saw a big spike in inquiries after sort of the first release when we were allowed back out after lockdown. People really just trying to assess their circumstances. And it was, looking a lot around affordability and income, and well, what can I do, what can't I do? Because people wanted to come out and buy houses or refinance because maybe they had to work from home and things like that. And we see these sort of continued trends, and these are the top sort of 6 or 7 reasons that we see month on month now that people are using the criteria systems to find. But there's also a sign here around contractors. And Craig, I'm going to pick your brains a little bit later on in the session if we can, because IR35 is clearly an issue for some brokers and their understanding of the market and how the contractors will actually change to the new rules and adapt. But look, the common themes are here. It is about affordability, it is about income, and I think people were worried and they just wanted to see their options. We can move on to the next slide. The dots are actually showing where the brokers are situated, where they're looking for self-employed inquiries. The vast majority are actually coming through from the London and the South East area, moving up into East Midlands. But the chart shows, you've got a sort of spine there going all the way through up to sort of Manchester, Leeds area. There's a lot of sort of self-employed customers there. I'm not saying other regions of the country are not having self-employed, but this seems to be the sort of core avenue that we're seeing the searches from brokers. And on the right-hand side, we've obviously launched our Smarter Fit proposition now, which looks at affordability. And the early results are actually indicating that for some self-employed customers, they're actually failing more on sort of income and to a degree on criteria, or maybe a mixture of both. And I think this has just been symptomatic of where the market's been over the last sort of a few months. And hopefully we can get that changing so more people are either more up to speed or have better opportunities, but actually the affordability models, the risk from lenders is actually improved, if you like, so the opportunities for those customers exist. So they were just 3 things that really stood out for me initially as part of this.
No, that's great. Thank you, Danny. And Nicola, Knowledge Bank, we've got some data from yourself as well, which we'll share on the screen. But the same question to you.
Yeah, I think we've seen massive changes, and as with this first slide here, you can see so as we look, so we've just picked 2 questions out that are on Knowledge Bank. So what around 1 year's accounts and what around the assessment of accounts reportability. So just looking at those 2 questions that are often searched together, but the number of searches that are done, as you see, January and February started off quite level really, and then obviously it's nosedived as we went into our first lockdown. But then you can see that peak of inquiries in July. So this goes along with the trends that we've seen, people coming out of lockdown, looking at getting their finances in order, and also as well that there's been a massive spike in inquiries about people moving out of cities, wanting properties with spaces to work from home, as people are perhaps doubting that they'll go back into offices, and as businesses are reviewing the way they go. So you can see how that's sort of peaked in July, and it's only really sort of tailed off to the back end of the year. You can see that's sort of, those inquiries for self-employed clients are just there. And if we just move on to the next slide, this just our inquiries increased by tenfold. Now, we don't have a mortgage desk, so like L&G have their mortgages, they'll help you place cases. So this is just brokers ringing into our broker support just to say, look, can you help us on this? We need to know more information. So we saw tenfold, the number of inquiries relating to self-employed applicants, which is, and those ones on that slide are the ones that we were being asked about. Top of the list, absolutely additional documentation requirements. There's a lot of questions around that, as both brokers and lenders were trying to find their way and navigate through new requirements. If you just pop on to the next slide. So what you'll see on here, so we're looking across the board. So on Knowledge Bank, obviously we've got all of the lenders that are on there. And again, I'm just picking out those 2 questions, the assessment of accounts reportability and 1 year of accounts. So these are the changes. So we're just looking at January to June 2020. And what's really, really interesting here is that January and February completely steady away. And I think that's because everybody knew there was something coming, but we didn't really necessarily know what and how hard. And as you can see, by April, lenders have really sort of made their changes, set their stall out, and then it does drop off then as we go into June, with not too many changes after that. So lenders are already saying, right, this is our stance on self-employed on self-employed applicants. And I think there's one more slide if we just have a look at that one. So this gives you an idea of the volumes that we've seen. So talking here about the self-employed income support scheme, which I know we're going to come on to later, that we've had 11,000 searches on that in the last 3 months of last year. So that's huge. 11,000 brokers searching on behalf of their clients on what the situation is with regards to lenders accepting this self-employed income support scheme. And if you think that's just 11,000 searches in the last 3 months, and that's just on Knowledge Bank, that doesn't cover any other system, any other inquiries. So that's a tiny snapshot of how that's looking, and that's just in the last 3 months. So that's very recent.
Undoubtedly, there's a lot of demand for information and knowledge, absolutely. And Craig, good comments on that under the next question. Thank you very much, both of you, for sharing that data. It's really interesting, and hopefully the brokers that are listening in, most probably because they have self-employed clients, can maybe feel that they're not alone, and it's there. So historically, the self-employed market's always been an underserved area, which you've both commented on. However, in recent years, we have seen some relaxation of criteria and of products. How do you think the self-employed market is supported by lenders at the moment, and what steps do you think lenders need to take in order to cater for these customers more so? So, Danny, let's come straight to you.
So it's very kind of that. I think there's a lot we can do. I think we have to take a very pragmatic approach. We have to realise that sadly some businesses have really struggled, and the levels of income mean how they may have a short shelf life now. So from a risk point of view, from a lender, I can understand some difficulty there. But there's also a number that have thrived, and others are just waiting for the green light to get back out. because we're all having to be told to stay at home for good reason and everything. So the classical hairdresser is a great example. They can't really actually go anywhere, yet as soon as they can, they are going to be very, very busy people. So it's about finding a balance which actually enables lenders to have a pragmatic view without increasing their risk unnecessarily, but just be realistic and honest about, are these businesses sustainable? Can they actually survive the test of time? And is it just a circumstance having to go through here that is causing the pain? So as long as the loans are absolutely affordable and assessed in a way that we've all got very, very used to, then great. It's very hard to exclude someone who actually has got money there, does actually have a future, whereas opposed to someone who doesn't. And I think it's just finding that balance. That's where manual underwriting really plays a strong part, and that's where the real pragmatic and just we are dealing with people, we are dealing with individuals, and just by using those relationships to build those will give us the right outcomes. And I think that's been a really, really important part for lenders, and I think that will be continued focus going forward.
Absolutely. Craig, I kind of feel that you want to jump in here, but I'm just going to go to Nicola first.
Always patient.
I absolutely agree with what Danny said, and something Danny said earlier as well, just to pick up on, because I think you're absolutely spot on there, Danny, that the self-employed market is going to increase. And if you say, well, on what basis? Well, look, let's just rewind more than 10 years ago now, when we had the credit crunch. We saw what happened there. That's when the people had lost their jobs, and they were doing the same job on a self-employed basis, or they perhaps had a dream always to take that redundancy and start a business. And so I think that's really, really important what Danny mentioned there, because that means that we've got the self-employed market as we have now, and that's going to increase. So how are we going to manage it? I think in terms of how that sort of pans out, that the specialist market comes into its own, manual underwriting, absolutely. And I always think, I have been a broker, and I think the good test is when you're sat with a client and you look at that case and think, if this was my money, would I lend them that money? That's the acid test, really, isn't it? And as Danny rightfully said, there are some businesses that are just not going to make it through this, and that's terribly sad. But there are others that as soon as the doors open, they'll be ready to trade again. So I think thinking about looking forwards, I think the biggest thing with regards to that is how lenders are going to assess accounts, because there is going to be a blip. There's no ifs, buts, or maybes. There is going to be a blip. And when we're talking about averaging over the last 2 years or 3 years, how is that blip going to affect people? So if you look at the difference between employed people, they've got furlough, they're back, and that's it. That blip's gone, and it's immediately disregarded as soon as they're back. This blip follows self-employed people around for years to come, and it affects their affordability. So I think that's going to be key, looking at how lenders address that then going forwards.
Absolutely. That's a brilliant cue, Nicola, for Craig.
Yeah, so I agree. It's going to be very challenging. So I think the key thing is lenders need to be far more flexible, possibly, than they've been in the past. So it's difficult because brokers, customers want certainty, and it's great having really clear underwriting rules that everybody can understand. That's a yes or that's a no. But actually, I think what we do need to do is look at things on a case-by-case basis. A few bad months at the start of COVID doesn't mean that business is struggling. It could be doing very well for the last 9 months or the last 6 months. So what does that mean? Because again, their accounts might not look great for this year. So it's taking the time to understand that and really having a sensible view on the sustainability of that business. And I think mortgage brokers, lots of self-employed mortgage brokers, probably a perfect example. You think at the start of the financial year, hardly doing any applications. I'd imagine June, July was a pretty bleak time to be a mortgage broker. Not many completions coming through. Proc fees were pretty hard to come by. But then a really strong second half of the year, huge boom in applications through August, September, October, loads of completions as we come up to the end of the financial year with the stamp duty holiday, etc. So a really spiky picture for a mortgage broker. And I think that's fairly typical of a lot of businesses. So it's how do you look at that? Because you look at the year, but actually there's a much more detailed story below that. So it's being able to understand that, and things like the bounce back loans, how do businesses treat that? Personally, I think a bounce back loan can be can be a great thing for a company if you've got an accountant that says, take this loan to 0% for the first 12 months, pay off your van that you're paying 7% on. That seems very sensible. But so you wouldn't want to penalise that business for taking a bounce back loan, because that's a very sensible thing to do. That actually makes it more sustainable. Understanding that, understand the difference with the self-employed grants, etc., which obviously they only go to businesses that have been affected. So what does that mean? So I think, we need to move away from the old-fashioned kind of thinking, putting people in a box. Employed looks like this, self-employed looks like that, and it really needs to be a good case-by-case basis.
Absolutely. And I guess one of the benefits of being a specialist lender is that we have the ability to do that maybe somewhat more than a high street or a larger lender. Okay, brilliant. So Craig, thank you. You mentioned bounce back loans, and actually my next question covers that. So the government have introduced obviously the grants, the bounce back loans, etc. But it's somewhat making maybe self-employed applicants maybe feel a bit more apprehensive about, can they get a mortgage? So this makes, even more so than ever before, intermediaries and brokers a more important part that they have to play. So this question is about, how do you think lenders will approach next tax year figures, or what do you think they should do? And how should intermediaries be supporting their customers at this time? Nicola, I'll come to you.
So the bounce back loans, and the SEIS scheme, this is an interesting one, and it kind of mirrors the mortgage payment holiday scenario as well. So when you look at that, and as Craig's just said, how many people took those because they absolutely needed them, and how many people were opportunities in their, thinking, okay, let's take that, it's cheap money and what have you. And it's, how do you differentiate between the two? So one size does not fit all in this scenario, and a lot of people, but then again, you could look at it and say, well, actually, in the example that Craig gave, somebody's been offered cheap money to pay off a more expensive loan, that's been quite savvy with their business. So again, it's very difficult, and there's nothing but manual underwriting that's going to get through that, really, to be fair. I think, going forwards, I mentioned earlier about how that the accounts are assessed, whether we're looking at a blip. The example that Danny gave about hairdressers, the minute that door's open, they're fully booked. So it's going to be a case of maybe industry by industry, and having a look at each one and see. We had a really good example of one lender that had said, when gyms were closed, as they are now, and this was somebody who had 6 gyms, and you would think, oh, you're never going to lend to them. But they did, because people were still paying their memberships. So yes, their doors were closed, but people are still paying their memberships. So it really, you just can't assume anything at all. And never has it been more important for cases to be written for self-employed people on a case-by-case basis, I think.
Absolutely. Thank you, Nicola. And Danny?
Yeah, I just add to that. Some great points that Nicola makes. We've got to remember that lenders were very happy to take very cheap money from the government if they could access the relative schemes there. And so businesses are doing exactly the same thing, whether they needed it or not. And some people, as you rightly say, have just taken it just because they can, not because they want it. It's the same people took payment holidays because they can. Did they really need it? It's just been allowed within the rules. So is it right to include those sort of things within the affordability calculations? Ultimately, there will be an outgoing for that company and income. That's what you're going to use as your basis of assessment. So I think that is really important. I think also, we've got to reflect that this is now a time where customers need advice like no other. I think, we are seeing, I saw a stat the other day that 79% of business is being written through intermediaries. Why advice is so key and so important, because there is a lot of uncertainty from customers, and I'm sure if they are going to the high street, the amount of times that they're saying no, well, in fact they probably can't get to the high street because actually the branches are not open, or are not open at the times where we want them, which is also quite fascinating. So they are finding other ways to do this, and the intermediary is key. They've got the expertise, the knowledge, the access to a wide range of numbers, a wide range of tools to find the answers, and so intermediaries need to be right on top of their game and actually promoting themselves to the customer. We can help, but they've got to understand the challenges too. I pick up that one of the key areas, funny enough, is that not so much about placing the cases. We recognise there have been challenges, but the market's getting better. But actually the quality of case packaging. We're all looking at lenders saying that it's taking days and days, weeks even, to get around to cases. And we know that self-employed cases take that much longer. So actually, what can we do to actually make sure the cases are better presented, better prepared, and having the right information to make sure that we get the best possible outcome and service for our customers? Because they're going through a worrying time as well. They don't want it going on for weeks and things. And especially as we've got the stamp duty deadlines coming, other deadlines coming as well, you know, are they being affected by the fact we're not packaging cases properly? So I think it's some forethought there from brokers as well, which would be really good. But Craig, can I come back to my point about IR35 here? Could you give us a brief idea of what you may do as a lender in order to sort of think about customers that are contractors today that may have to move to either a self-employed or employed model? Will you treat affordability differently?
So I think it depends when they make the switch. So obviously the whole point of IR35 is the government trying to crack down on people who are long-term contractors for a given business, because they don't deem to be able to, they're not paying enough tax, so they typically set themselves up as a business, there's lots of write-offs, etc. So I mean, they're trying to get people to, they're kind of saying you're effectively an employee because you've been, you know, potentially, I think we all know contractors who have basically been at the same desk in the same business for 7 or 8 years, worked as a contractor. So it's that kind of thing they're trying to cut down on. So, you know, people will either go one of two ways. They'll either end up being employed by that business, which I think is the government's intention, and got much better visibility and a higher tax take, or they'll have to prove they're not kind of solely contracted to that business and do other things and act more like a traditional contractor in the way that you would expect. And I think we're starting to see more people actually move to the employed route. I think businesses have really cracked down, you know, they understandably want to stick by the rules. So had some fairly clear guidelines that if you've got all these contractors in your businesses, especially some of the big businesses, some of the big banks got loads of them in the IT departments, you need to either employ them or get rid of them or find a different way of working with them where they're not just working for you. I think we've seen a lot of that over the last 12 months, and some of the big international banks have done a lot of that. So I think from our perspective, it will be, well, if they've gone employed, what does their new employment look like? You know, clearly, if you're working for one of the big banks, you'll be partly dependent on bonus income. So how do you think that will evolve? And if that's happened a while ago, then you've got much clearer clarity. We'll typically look at a contractor as long as we're in the same industry. We don't expect you to have a track record if you've become a new contractor, and that should work the other way as well. So for us, it should be fairly simple because it's what we do. I think maybe some of the less manually underwritten other lenders will struggle with that. For us, I don't think it's much of an issue, but yes, it is that whole thing about you've had a recent change from contract to perm or the other way around. How does a lender treat that? And I think that's why, you know, coming to a club for advice, looking at the kind of service Nicola can offer is really important, because they're the kind of questions you need to understand as a broker when you're considering where to place that case.
Absolutely, good question, Danny. And I think you hit the nail on the head with the packaging and the service piece as well. And Eloise has actually got a session after this where she's going to cover packaging for us, so really important. We have run out of time, but I have one final question. So just in a few words, if that's okay. The future, let's look into the future. So the future of the self-employed market, how do you think it looks, Nicola?
As we've said, I think it's going to increase as we saw the trends the last time we had something that, you know, a crisis that hit. What I would like to see in terms of lenders is a lot more focus put on looking at current business levels rather than looking back retrospectively, because I don't think a retrospective look over the past year, 2 years or 3 years with what's just happened is going to reflect fairly on that person, that self-employed person or their business. So I would like to see underwriting done with a clear view of where that business is now and how it's performing.
Brilliant, thank you. Noted, Craig, from Nicola. And Danny, just a few words.
I agree. I think it's going to be a very strong market. I think we're going to see a lot of new businesses, maybe in some different areas that we haven't thought of before, as customers now decide, or so business owners think, well, what does the current customer need? Compared to where we were in the pre-COVID environment. I think technology is going to continue to play a part. I think it will make the journey easier, better as we get access to more and more records and things, but advice is still going to be at the heart of everything we do, and the need for manual underwriting, I think, will go a long way. I agree with Nicola. Let's deal with these customers in a different way. Let's not be too retrospective. We've learned we can start to look at them in the here and now, and how do we project that going forward. But for me, I think it's a really, really positive place, a really strong place, and I think there's a lot of customers that are going to need intermediaries' help.
Absolutely, thank you. And Craig, for once, I'll give you the last word.
Thank you, just for once. Yeah, so I agree, really positive. I think in the future there'll be more self-employed people. That's what we saw from the last recession. I think probably the key thing I'd leave it on is I think it's a really good opportunity for brokers. Like Danny said, people need advice more than ever. The more complex the market gets, the harder things are, the more people need advice. And these guys really need your help. So think beyond the usual suspects. You know, make sure you're looking at what criteria is out there. Things are changing very quickly, which makes it hard to keep up. But it is a good opportunity, and it's a real opportunity for brokers. The kind of robo brokers and the aggregators, that they can't do this kind of stuff that the brokers can do by understanding what's available, taking the time to understand that client's needs and finding the right place to put the case. It's a really good opportunity for brokers going forward.
Absolutely. Thank you, Craig. And I agree, a great place to end this debate on. So it just leaves me to say thank you once again. Thank you, Danny, Nicola and Craig, for joining us today. And hopefully we'll speak to you again soon.
Thank you.
Thank you once again to our panelists for joining us there. I mentioned the slides are available to download. So if you want a copy of those data slides to share with colleagues, friends and family, if you really want to, then you can download those for your use. We also still have the opportunity, if you want to ask any questions to our panelists, then send them through. Eloise will be filtering them. Give her a few moments because she's next up on the criteria session, but we can come back to you as and when. So the self-employed criteria session, as I mentioned at the beginning of this session, this was actually requested by yourselves. So hopefully this will fill a knowledge gap for you. We don't normally do this, so I will hand over to Eloise, who will go through our criteria.
Thank you very much, Frances, and hello everyone. My name is Eloise Hall, Key Account Manager at Kensington Mortgages, and I'm going to be running through some of Kensington's key self-employed criteria. In 2019, over 50% of Kensington's business was to self-employed applicants. So this really is an area of the market which we deal with very regularly, and our underwriters live and breathe. Throughout lockdown, Kensington was able to stay open and continue lending, and we didn't change our criteria to penalise any set industries or areas of the market. We adapted to accommodate for things like the bounce back loans and the new government grants that we were seeing introduced. So on the screen now, you will see some of our self-employed key highlights. The first one being LTV. So pre-lockdown and pre-COVID, we could lend up to 95% LTV to a customer who has 2 years self-employed trading history, and up to 85% LTV for a customer who only has 1 year's self-employed trading history. Currently, due to our business volumes, our maximum LTV is 80%, or up to 85% if you have a self-employed customer who meets our heroes products and criteria. We will always use the latest year's figures towards affordability, and we do have flexibility on what income we do use for a limited company director who has a 50% share or more. So we can either use salary and dividends or salary and net profit, whichever one's most advantageous for your customer. Something that's been asked of me already in the questions and in some of the pre-questions that we had on the feedback forms for this webinar is a very common scenario. So if ever you have a situation where you are just about to place your application for your customer and remortgage your purchase, and just at that point in time, that customer's accountant tells them, actually, we should change from a sole trader to a limited company, that'll be much better for you. That can cause a lot of issues for some lenders, but not for Kensington. So if you have that scenario, that's something we're very happy to deal with. We would simply just use their latest year's figures, whether that's their sole trading figures, although they might be a month or two down the road into being a limited company. That's something we've got flexibility to help with. Something I did also want to pull out of this is our high earner policy. So when we're looking at high earners criteria, we can accommodate self-employed within that. So high earners gives an affordability stretch up to 6 times income if we're looking at particular income amounts. So if we've got a Mr. and Mrs, both are maybe accountant, self-employed, something like that, and they both have a 40k basic and a 10k dividends that they get, that equates to 100k on the application, which means that we can qualify them for 6 times income. And so it is an affordability calculator, so do make sure to run it through the actual calculator on the website, because if they've got 6 car loans and 20 children, that will of course impact the overall calculation. Speaking of affordability, we also have flexibility when we're looking at a customer's business expenses. So if they have perhaps a company car or a company van, but that might be on their personal credit file, that's not necessarily a problem for us, as long as we can get suitable evidence, perhaps from an accountant, confirming that it is a business expense, so we can ignore that from affordability as well. When we're looking at products, we have the same product range for both self-employed and employed applicants as well, majority of which coming with free valuations on both a remortgage and purchase available too, so keep an eye out for those. And lastly, I just wanted to cover, as well as self-employed, we also lend to contractors, and it wouldn't be right to go through all this criteria about self-employed without mentioning them, because they're a big part of what we do at Kensington as well. So we use a calculation, which is day rate times by 48 weeks. And we're very used to the complex scenarios as well. So if you have perhaps a contractor who set up their business as under an umbrella company, that's absolutely still something we can consider. We do like to see 12 months history of somebody being a contractor, but we do have flexibility within that if they've had similar employment histories within similar roles before too. And we can be also very flexible when it comes to gaps in employment, which of course in current times we're seeing a little bit more regularly. So definitely worth a conversation with your BDMs on that one too. So on the handout options here, you will both have this slide available to download, as well as our packaging video, 6 ways to help speed up your application. So both of those are available for you to download. Like a lot of lenders at the moment, we are experiencing higher business volumes due to the stamp duty deadline ever quickly approaching. So to ensure you get the most effective service from Kensington, please make sure to look at that video and package your case well, or by all means contact your local Kensington BDM for support as well. If you have any questions now, please do feel free to get in touch. I'm now going to be available on the website's chat function, so please do follow over onto there, and really appreciate your time for me today. And I'll now pass over to Craig McKinley, who will go over our latest Kensington update. So over to you now, Craig.
Great, thank you very much, Eloise. You'll all be glad to know this is the last slide, so we are pretty much at the end, so I'll try and go through this quite quickly. So just a quick recap of kind of what we've been up to at Kensington over the last year, and what we're planning to do this year. So we continued lending in 2020. We didn't kind of switch off, which was great. We had to adapt the whole business to working from home, payment holidays, obviously challenges you've very much experienced as well, being a broker. We launched in Northern Ireland, which was great at the end of the year. So we're the only specialist lender in Northern Ireland. So that's really good to have that kind of full UK footprint. We also invested in our technology. We launched a new broker system that has enhancements and launches every month. So we'll continue to kind of evolve and improve, and we'll have new activities we can launch. And then critically, we also recruited. So we've invested more in the business. So we recruited 40 people over COVID. Interestingly, we've never actually met any of them, which is very unusual. It's all the recruitment's being done over Zoom and Teams, and obviously those people are working from home, but very much about supporting brokers. So we've invested in more people for the BDU, lots more underwriters, which is a critical resource, and we're continuing to do that. So we've got big recruitment plans, especially in underwriting, so that we can support brokers as best we can, and get back to having really good service levels. Focus for this year, doing lots of work on our self-employed proposition. So we do need to think about, normally we'd take 1 year's accounts. Is that still the right thing to do? Should we be looking to change that? Bearing in mind that some people would have had accounts that have been hit this year by COVID. So we're looking at self-employed. We wanted to enter new markets as part of our growth plan. So There's some new build areas we're not in currently in First Charge, things like shared ownership, things like some bank and mum and dad propositions. There's some interesting possible replacements for Help to Buy we're looking at, so watch this space. We've always done lots of high LTV lending, so typically we've done a lot of 90 and some 95. We'd like to get back to those. We cap out at 85 at the moment on our Heroes proposition, and we'd like to get back to buy to let at 80 and 85, which we did pre-COVID. And then, yeah, this year is very much, we are primed for growth. We've recruited, we've invested in the business. We want to have a very big year this year, so we'll be asking for your support to do that. Sales teams are available however you want to work, whether that's when things open up, who knows when things will open up, face-to-face or on Zoom or on the phone, however you want to work, we are standing by to help you. And then we'll be doing lots more Kensington events, so more webinars like this. This is, I think, the 7th one we've done. We do them every 2 months. We've got one in March. Scarily, we're going to do a 1-year review of COVID because it will be a year since the first lockdown. We did do a survey at the start of last year when we went into lockdown of brokers to ask them how they were feeling, what kind of systems and tools they were using, what their outlook for this year was. So we're going to rerun that survey, so look out for that because that'll be really useful, and we got really good feedback from brokers who found it really useful to understand how other people were facing into those challenges. We know if you're a self-employed broker, for instance, it can be quite a lonely job, so we'll get some expert advice, and we'll find out how other people are dealing with this and what their plans are for the future. So that's us in a nutshell. Thank you for joining today. This has been by far and away our best ever webinar, about 2,500 people registered. So really appreciate your attendance. And I'll hand back over to Frances to wrap up.
Thank you very much, Craig. And yeah, just thanks everyone. I mean, it's been a phenomenal response to this webinar, so thank you, and thank you for telling us what you want us to talk about, because that's quite important. I'll just finish on by reminding everyone that we'll send an email out later today at 3 p.m. So you have your CPD certificate in there, and then access to these presentations, etc. We do all of our updates on LinkedIn and obviously on our website as well. So follow us on LinkedIn, connect with myself, Craig, Eloise, and all the panelists. And once again, thank you very much, and we'll see you all hopefully in March.